Hello everyone, this is Kaushal Maroo. I track the cement sector at DSP Mutual Fund. I'll take you through our medium-term outlook on the sector. A broad context, we are about in the cement sector 3.5% of the index weight, and it also accounts for about 3.5% of the profit pool of the broader industries. We are just about moderately positive on the cement sector. There are a few data points which we like, and there are a few data points which we don't. Sector utilization of close to 70% for almost a decade is one data point which we would have hoped to have improved. If you go back to the decade of 2000 to 2010, the cement industry clocked a utilization level of beyond 90%. That led to a sharp increase in the EBITDA per tons, and the sector ROC crossed the 20% mark. Since then, this peak utilization of 98% has come down to a close to 70% range over the last decade. This was led by higher capacity addition and a modest growth rate only. As the utilizations came down, the return on capital employed also came down from the peak of 26% to a range of 10 to 14% in the recent past. If I look at the bright side of things, with just about 70% utilization, the sector has been able to clock an ROCs of higher than the cost of capital. On the negative side, however, the 70% utilization doesn't look likely to go towards that 85 to 90% mark again in the medium term. The valuations for the sector again are also clocking a number close to the historical highs. So just about a moderate uptick in utilization and a valuation which is on the higher side make us moderately positive on the sector. What could have got us super constructive was if you had seen the utilization going to that 85 to 90% range, which led to sharp improvement in the profitability of this sector in the previous decade. So in the medium term, we expect a growth rate in volumes of about a 6 to 8% mark. This will be led by strong housing demand in both rural and urban India, continued support to the infrastructure sector by the government, and a cyclical uptick in the real estate category where there has been a decadal-long slowdown. However, this 6 to 8% growth will be matched by about a 5% growth in the capacity as well. And that is why the sector utilization will only move up from a low 70s mark to somewhere closer to 80% at best. Though this is a positive, this is still not the level where the pricing power moves completely in the hands of the industry. Another positive happening in the sector has been a modest uptick which has happened in the consolidation. Importantly, of the incremental capacity, almost 80% is being added by the top 5 players. Improving utilizations in the sector along with consolidation augurs well for the pricing power, and we could expect companies to be in a better position to pass on the cost increases to the end consumers. The companies have also been working a lot on their cost structures. Power and fuel cost is one area where companies have looked at options like alternate energy to bring down their overall costs. The increasing share of green energy does not only help companies comply with their environmental norms, but is also a cheaper source of fuel. On the freight side also, we notice that the companies are increasingly using a lot of technology to bring in supply chain efficiency and optimize their overall cost structure. This also will gradually lead to some improvement in the overall profitability of the sector. To sum it up, on the positive side, there are things like improving utilization and consolidation happening in the industry, and at the same time companies are looking at their cost structures. But on the flip side, the utilization for the sector are still at just about modest levels and valuations are on the higher side. To change our stance from moderately positive to super constructive, we would have expected the sector utilization to grow to the 85 to 90% mark. But with the kind of capacities which are coming in the sector, we do not expect that to happen in the medium term. At the end, I would like to say that mutual fund investments are subject to market risks. Read all scheme related documents very carefully before investing. Thank you.